Hi, welcome back to Westbury 101. I'm Brian Westbury, Chief Economist at First Trust Portfolios. Remember, we want to be the antidote to conventional wisdom. Well, today I want to talk about the Fed. It is flailing around. Say Flailing Fed 10 times really fast, just for fun. But what I'm getting to here is we've just had an announcement that the Fed is now planning or thinking about doing a sterilized QE3, a QE3 light is what they're calling it. What they're saying is that they are still worried about the economy and if it falls again, if it slows down again, if inflation turns into deflation, they need to have some more weapons, and so they don't want to scare the markets by proposing something big like QE3. So maybe they're going to do something a little lighter, and so they've come up with this new invention called sterilized quantitative easing, or sterilized bond buying. And what they would do is they would print money, poof money, if you will, because they can just create it in bank accounts, zeros and ones. All they have to do is change what the computers say, and they can literally create deposits in the banking system, buy bonds with those. But then what they will do is try to pay banks to give the money back to them, and that sterilizes this so it won't cause inflation, but at the same time it keeps interest rates down. If you followed all of that, you're pretty darn good, because it's real confusing to me nonetheless, because when I hear them say this, I think about QE1 and QE2. And I want to show you two charts that we've used before real quickly, because I think banks are already sterilizing the quantitative easing that the Federal Reserve is doing. Here's the first chart. The first chart is a picture of the monetary base. The red line is a 6% growth line. By the way, I have taken these charts, stolen them, if you will, from Califia Beach Pundit. My good friend Scott Granis came up with this way of showing this. So if you look at the 6% growth line and then look at the monetary base, the blue line shooting off the page, you can see that in the past couple of years, the Federal Reserve has tripled the size of the monetary base. They've created, they've poofed, they've printed lots of new money into the banking system, lots of new deposits, and they've used that in QE1 and QE2 to buy bonds. So then the question is, what have the banks done with that money? And if you look at M2, that's the second chart, it's got the same 6% growth line in it. M2 is growing right along the 6% growth line. In other words, banks have not used the quantitative easing to lend out more money into the system. In other words, as the Federal Reserve has created, printed, poofed this new money into the system, the banks have just given it right back to the Fed. They're earning 0.25% as excess reserves held at the Fed. In other words, the banks are sterilizing quantitative easing already. So this talk of a sterilized bond buying campaign by the Fed, I'm kind of left as a little flabbergasted, because in actuality, that's what's already happened in the system today. And by the way, this brings me to my second point, and that is that quantitative easing, in my opinion, has not lifted the stock market or the economy. The Fed wants you to believe that it has. The Fed wants to take credit for this recovery, just like they want to take credit for every recovery going back in history. And it's why I believe they're proposing this new sterilized bond buying, because they want to take credit for the recovery. The recovery has taken so long to gather steam, and it's finally doing it now. And here we are 8 months after the last quantitative easing move, QE2, ended. So how can the Federal Reserve take credit for the recovery that's happening today? Well, some Federal Reserve officials will say it's Operation Twist. Remember, the Fed sold short-term bonds, bought long-term bonds, but you know what I think that is? It's like dipping a bucket in the short-term end of the pool and taking it down to the deep end of the pool and dumping it in and saying that that changes the level of the pool. It doesn't. It just moves the water around. So this idea that somehow the Federal Reserve is behind the current uptick in economic activity or in the stock market, it's really hard to believe. The Fed wants you to believe it. I don't. I do not believe that is exactly what's happening today. There's a point that I want to make, I've made before, that is very, very important. If the Federal Reserve is printing money, poofing money into the system, creating deposits out of thin air, and if that money then is being used to buy stocks, which is in effect what the Federal Reserve is saying, what Ben Bernanke says, then the price of stocks should go up artificially, and that should raise price-earnings ratios. PE ratios should go higher. But in fact, since the Federal Reserve started quantitative easing, PE ratios have come down. They have not gone up. There is no evidence that quantitative easing has helped the economy, mainly because banks have sterilized the action by giving the money right back to the Fed and not growing the M2 money supply. That brings me to my final point. We've made it many, many times. The economy is growing today not because of anything the government is doing. Yes, 0% federal funds rate and the 6% growth in M2 is lifting economic activity some. However, it's not the only reason the economy is growing. The economy is growing because entrepreneurs, innovators, creators, the cloud, the smartphone, the tablet. We just had the release of the iPad 3, the new iPad this week. These new technologies, if you look at fracking and nanotechnology and biotechnology, these new inventions are where growth and profits and productivity are coming from. That's what creates wealth over time. The Federal Reserve cannot create wealth. All it can do is print or not print money. That's it. Government spending doesn't create wealth. If it could, there wouldn't be a poor person anywhere in the world. What I find fascinating is that the Federal Reserve is still flailing around trying to find a way to take credit for this economic recovery. In fact, when I look back over this past year, 4 out of the last 6 months, we have had 200,000 plus private sector job gain months. And I'm counting the month of February, which we'll know tomorrow morning in that 4 out of 6 months. The economy has accelerated in the last 6 months. And what's amazing about that is that government spending has been flat and that the Federal Reserve really hasn't introduced any new plans. The less the government does, the faster the economy will grow. I, for one, hope that the Federal Reserve does not roll out this sterilized policy, this new policy, for 2 reasons. 1, it will not help the economy in any way, shape, or form. And 2, it will, if they don't roll it out, hopefully individuals and investors and the citizens of the United States will realize that growth doesn't come from government or the Fed. It actually comes from their fellow citizens who invent new products and raise productivity over time. Thanks so much for visiting Westbury 101. We'll see you next time.